Welcome everyone to another market recap. One of the toughest things about trading is you can be completely right about what's going to happen, but the market is going to do everything it possibly can to make sure you are not a participant in the move that's about to happen. For me, I knew with a very, very high conviction that since we got S&T with this high, so that means there's a breaking correlation where the Nasdaq makes a higher high, the S&P makes a lower high. I knew that when we got this S&T and this 1 hour inverse for value gap, I knew we were going to dump. Like, I knew with a very high probability that we were going to dump because this on its own on the hourly is a setup down to this data low, right? That's a 3-to-1 risk reward setup on the hourly. And you can see we go hit that data low. This was a data low. And what else gave me conviction in this data low? Well, actually, we had, if I pull up StatMap, this is going to blow your mind, but guess what happens? We go right up to around our daily manipulation level, and then where do we go? To the draw on liquidity that's right around the daily distribution level. So you want to pair your distribution level and manipulation level with some kind of liquidity. In this case, the data low was right around that daily distribution level. And so for those who don't know what the stat map is, this is like your statistical expected levels every day. So on a bearish day, it goes up here and then distributes here. On a bullish day, on average, it'll go here and distribute here. So you can see how typical this day was. The issue was, how do you get an entry when the market goes? So we had the accumulation range. I marked this out in the morning. The issue is, how do you get an entry when the market does this? It makes sure that you are not going to be a participant in the move that's about to occur. It'll do everything that it possibly can before continuing down. So what I did is I saw this as manipulation. And then I saw this BPR here. And so I tried to enter here and then to get involved in this move lower. And unfortunately, we then came and took buy side one more time before we eventually continued lower. Now, there were a couple trades that I wanted to take, but sometimes it can be very, very hard to get in with an inverse for value gap when it's happening, honestly, kind of at the speed of light. But one of these was this 5-minute inverse for value gap down to this low. I really wanted to take this trade, but it's something that I'm going to have to get better at reacting to because I have to be prepared for this to close below. Once this did close below, though, I knew this was a good trade. I would have taken this. So we got A, M, so D down to this low on the lower time frame, right? So, boom, IFEG. I was going to take this. It's just hard to enter that fast. So something I'm learning that I can do is when I get my position tool ready, right? Because a lot of time I have to get my position tool ready to know how many contracts I'm going to buy. One thing I can do is I used to have to like set my stop loss and take profit after, right? But one thing I can do is I figure out, okay, so I'm on the wrong chart, but this would probably be 8 mini contracts. So I go in here and I click, okay, I want to risk 8 minis, and then I can actually just type in the stop loss to be 200 because all my stop losses are going to be 200 every time. And I'll probably put in like 400 for take profit. and then I'll adjust it after. And so that's going to help me a lot. Anyway, um, accumulation, manipulation, distribution. This 5-minute IPG was really, really nice down to this low. I would have taken it, but it was just so fast. And then the same thing with this, right? I'm going to get better at catching them faster. But this on the 30-second was really, really good. We got that sweep of that low, and then we get an instantaneous, like, 3-candle move on the 30-second back and close above this. I mean, that happens so fast. It is hard to get your entry when it does that. And so I'm wondering, like, how can I get my entry when it happens that fast? Because a lot of the time, I have to set up my long position tool before before I can even enter the trade, because I have to know how many contracts to buy. Like here, I would need to know, okay, 6 contracts. Otherwise, I'm not going to know how many contracts to buy. I think there's not really much other way to do it. I just have to be faster. But if you guys know a better way, let me know. Okay, so we get that inverse fair value gap. Stop loss goes at the low of the old fair value gaps candle. And I would just click. Shoot. Anyway, you get the idea. 6 contracts, stop loss at 200, and then this would just be automatic. And that would be a 1-to-1. So that was a good trade as well. But like I said, the market loves to do this thing where it makes sure that you are not going to be a participant in the move that's about to happen. It loves to do that. And so I knew that we were going to come down and run all the way to this low. Actually, as well, we had a new day opening gap here. And so this is what else gave me a lot of conviction in this BPR was we had a new day opening gap and we were delivering from midnight. So with all that in mind, I had a lot of conviction that we were probably going to start our move down. Now, the hard part is, like, I feel like it's a good trade, but it could always be better. And what would have been better is another sweep of that high, filling the new day opening gap before finally continuing lower. So it's hard to be perfect. At this point, we get a trade on the 1 minute or the 2 minute, 3 minute. Yeah, I saw this, right? I saw this, and I knew it was possible that, like, you could take this, but I didn't think it was that high probability. You see how we come up, sweep this high. So this is like your A, M, D, right? A, M, D, and I knew we were sweeping this high and inversing this fair value gap here. But to me, like, this wasn't like the best in the world because it was wicking this out. But in hindsight, I guess since we swept out everything so many times and then filled the new day opening gap, honestly, it's actually better than the trade that I took, right? Because look how many times you've taken buy side. The sellers are exhausted at this point, and you have to take that into consideration. And so anyway, I think we might have even gotten S&T as well here. Let me check. Yeah, so we get S&T as well with this high. So we get SMT here. And so this is also what gives me a lot of conviction, right? So we get SMT here. Inverse for value gap distribution to the downside here. Down to our daily distribution level. So I knew that this was where the market wanted to go, but man, the market will really do everything in its power to make sure you're not a part of the move. But we did go and take out that data low, and let's see. So I have this trade from Hydra. Hydra talks about this trade here, if it'll load. So here's this trade from Hydra. Doubted this short at first, went in with low risk, and it worked. But the reason it was so good is because sellers are exhausted. Look how many times we've swept buy side. 1, 2, 3. So here's 1, here's 2, here's 3. Then we get the inverse. Although it's not in like 3 candles, and although it's kind of wicky, at this point, you can know that the sellers are exhausted. And that's what you want to see. You want to make sure the people that wanted to be part of the move aren't a part of the move, right? And just like the market will do everything in its power to make sure you're not part of the move. So like, although this trade was good, it wasn't good enough, if that makes sense. We got the BPR here. And another thing I'm noticing about BPRs is if it's not a quick sweep and then quick retest, like for instance, we sweep this, quickly retest, and then go down, a lot of time, if it goes down like all the way here, so here we get the sweep, and then we come all the way back up, at this point, it's not as good, right? So you want to have it sweep the high and then get a quick retest and then keep going down. That's the ideal way to trade a BPR, I would say. Same signature and price. You're looking for a breaker block, and for a inverse for value gap, you're looking for a BPR. It's the same thing you're looking for. So anyway, there's that BPR. We come up and push back higher. But yeah, it was very clear to me that this was a sell model. You can see how we got SMT here. And as well, you'll note that London, so we had a London reversal kind of day where London if it'll load. Where London pushes up into a key level. We had no key level, but there was an SMT there, and Asia was a clear range. So what other daily profile would it have been, right? There's not really any other one it could have been. Doesn't look like New York reversal or New York manipulation, because this would be New York pushing into a key level. We had London pushing to a key level. And you would know if it was seek and destroy. So it's honestly, New York Judas is the most confusing one, but anyway, it was pretty clear this was a London reversal day, right? Because you get London moves up and then a quick move back down. And so what are you looking for? You're looking for that continuation in New York down to that daily distribution level, that data low. That's what I was looking for. It's tough to be able to for sure get part of that move. You'll note that also we retested this change in state of delivery, and that's something that I was really looking for to happen, was us to retest this change in state of delivery. And we did end up going and retesting it. But I thought that this was good enough right here. I thought this retest of this changes to delivery right here was good enough. And so then I was looking to enter on that BPR, right? And a lot of time the best BPR entries are when it's a quick retest, right? That signature and price where it's a sweep retest. So unfortunate, but there were quite a few trades you could have taken. It's just honestly the best inverse for value gap trades happen when they're fast. And so it's hard to get in those ones because they happen so fast. But the best ones happen really fast. It's just how it works, right? The best ones either happen really fast or like after you've swept out a ton of highs, like sweep, 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 inverse, and then distribution. So unfortunate. Yeah, let's see. It was clear to me from the beginning of the day this was a sell model. You'll also note that if we measure out our standard deviations of the manipulation move, right? Measuring out standard deviations like this. Or was it, sorry, let me hang on. Let me get it measured to the top here. Let's get rid of everything. Let's remove all of our drawings. So if you measure out this manipulation move from here to here, and I actually put this out beforehand, right? I said I had the 2 to 2.5 measured out, and I had the 4 to 4.5 measured out, and I noted how. Hang on, let's just get this to the top here. This 2 to 2.5. What drawn liquidity exists right past the 2 to 2.5? The data low, right? So the market was drawing here the entire time. And we retest that change to delivery. I thought on the retest of this here, that BPR entry was good because we actually retested that change instead of delivery off of that that BPR. Or I'll show you what I mean. So we react off of that changes to delivery right here, and we come down. I thought this BPR was going to be a good entry, but clearly it wasn't. So we have this trade from Dodgy. He says, one and done for the day. This was the trade I would have liked to get in on, but it was just hard to get in on, so oh well. SOTEP trades. So we got a trade from SOTEP. Let's look at this. So this was an inverse that happened way later on that unfortunately I was off the charts, but this one was a good one because you take out the data low and it's just like once you get a clear draw on liquidity like that, especially when you know that this is like this draw on liquidity was right around that daily distribution level, that 2 to 2.5 standard deviation. So you knew that this was a good area to expect a retracement, right? You knew this was a good area to expect the retracement. So what happens on the 1 minute chart here, you get a very clear inversion. Now, I'm not sure if that inverses, but maybe you could say it was close enough, right? Low key, that does not inverse, but we're gonna look at the one from Dodgy as well. Yeah, see, Dodgy doesn't have his entry until this candle right here. So we're gonna have to move the entry to here on this candle and stop loss once again at the low here. Drag that out. So you'd have to enter on this candle. Stop loss here. And then just target this internal high. This would have been a nice 1-to-1. And that's all you need for $200 a day. You have to realize that. So this was a good trade. Nice 1-to-1 risk reward trade after sweeping the data low. So now after all of this happens, right, we've already had our manipulation distribution. We consolidate now because the day's objective's been done. We hit our objective. I want to talk about this. So we had a breaker that formed, as shown by Ash Trades here, and you can see this breaker was right here on the 3-minute. So we had SMT at these lows as well, and so that's what made it very confusing, because there was SMT here and here. So like I could have seen a situation where like since we got SMT here, we could have pushed back higher before continuing lower. But at the end of the day, like, I was bearish, so I really wanted a short. I was so close to getting the entry, but the market wanted to sweep one more time. And so I think that's just something that I'm going to have to remember is, like, the market is not going to it's not going to be easy. It's not going to necessarily let you get the easy entries. Now, I think maybe it's okay that I took this because maybe this could have worked, but in the future, I should have taken this one on the 2-minute. I should have taken this 2-minute inversion on a different account. I mean, the 3-minute inversion. I should have taken... So one of my biggest issues today was I took the same trade on 3 of my accounts, and I just want to stop doing that. I want to have essentially only one trade per day per account, and sometimes I'm only going to trade like a couple of accounts. I'm not going to trade all of them. And I just got to get better at that. But anyway. Here's that 3-minute inversion. And this one would have been really, really good. So I should have at least tried this one on a different account. So not the same, only one trade. So I took this same trade on all 3 of those accounts, and I should have only taken it on one account, right? So that's a big lesson from today. But then I should have tried to take this trade on a different account as well. And you can see this one would have been a 2.7 to 1 risk reward trade. But let's also talk about why this breaker block trade did not work out. So we had a breaker block here, as Ash Trade shows. This was on the 5-minute. So we have this breaker block. We have this breaker block. We have this fair value gap. And so he's like, well, why doesn't this work? Because we got our AMD, right? So we should distribute. The reality is the market was so bearish that this just wasn't super, super good. So just keep in mind, like if you get like a 4-hour bearish SMT and a London reversal kind of day, it's just not worth it to take the long. So I was looking for shorts. I had the right idea, but I was just a little early. It's all right. So here's that breaker block. Here's that fair value gap. If I were to do today differently, the main thing I would say is I should have only done that trade on my one account, and then I should have taken this other trade on a different account, this inversion right here. And as well, you'll note that we actually got a breaker block set up over here as well. We got a sweep of this high. Sweep of this high, and then I believe this was a breaker block setup. I remember looking at it. See, I think these are the good BPRs. The ones that, like, I mean, this one isn't even, like, great, but, like, you get a quick sweep of a high, quick retest, and then boom. I guess it would be better if you came down and then quickly retest, but, like, whatever. Sorry, guys, this market recap's kind of, like, all over the place today, but I actually don't see that breaker trade that I was talking about. That's okay. In the future, I'm going to do a better job of preparing for the market recap so I can kind of just go all in one go. I'm sorry today was a mess a little bit. But lastly, we're going to talk about, so here we have Dodgy saying this was a market maker sell model down to those data lows. And we knew that this was a high probability area to sell. The new day opening gap overlapping with midnight. So once again, I want to be able to take multiple trades with multiple accounts and not take the same exact trade on 3 accounts. Like if there's a second opportunity like there is right here with this 3-minute inversion, I want to be able to take this on a different account and give it a shot. Because it sucks if I take the same trade on all 3 accounts and then lose, and then I get a different trade and it works. And so honestly, I think that's the best way to diversify my risk. That's how I'm going to do it personally. So, anyway. Then we're going to talk about camel trades a little bit more. So, we have him showing here that he got the same trade as Sotep and Dodgy after we took out this low, after we took out the data low. You go to this internal high for a nice 1-to-1 restore trade. And then he also takes this, which I'm not sure how he entered right here. Like, maybe he had a lower time frame entry. But I would so he either needs to take this on this time frame because I think the lower time frame isn't going to be as clear. Or maybe he could, I guess he could take this on the lower time frame, but with this candle close this high, the RR is low-key not really that worth it. I would say that's probably the main reason this failed. If this closed right here, then this probably could have worked, but I don't know. It's also in a consolidation, right? Like understanding market conditions is consolidation, so I think that's the reason that failed, but yeah. Then, real quick, we have this from Trader Kira. This is a 5-minute inversion. You have a breaker, a sweep of New York AM's high, a push down, retest. Here's that fair value gap entry on the breaker, stop loss above the breaker, and then nice 2-to-1. These 2-to-1 trades are just off the breakers, are super, super high probability. So, excellent job by Kira. That was on the S&P. And I think that about covers it. Sorry, my computer's so laggy, and sorry, this recap has been all over the place today. But the main idea is today, with this 1 hour inversion, we knew that we were going to probably continue to the downside today to this data low, which was around that 2 to 2.5 standard deviation. I knew this going into the market. We got that SMT here, and we got an SMT here. So I had everything right. Unfortunately, this BPR that I entered on did not hold. And I think if the market comes all the way down and then comes all the way up like this, these are just not as good BPRs. And that's just something that I'm going to learn through screen time. So what would have been better is this inversion. So the main thing I'll do differently is not take the same trade on 3 different accounts, just 1 trade per account per day. And then like if something like this fails, like this was probably okay to take. But if something like this fails, then I'm able to take this 3-minute inversion on a different account. As well, I should have taken this 5-minute inversion on one of the accounts, and then I should have taken this 30-second inversion right here on one of the accounts. So today should have been, if I executed perfectly, today should have been 3 wins, 1 loss. So I happened to take the one that was the loss, and it was just because it was the slowest moving one, right? And it's just another thing to note is like if it comes down like this and then slowly trends back up, it's just not as ideal of a trade. So anyway, sorry about the market recap not being as good today, but you know what? It is what it is. Let's keep getting at it tomorrow. I'll see you guys later.